Welcome back to Crypto Coin Insider. I'm Candace, and this is your daily Bitcoin analysis for November 27th, 2025. Today, we're looking at what changed overnight and what the market is telling us right now. So here's the situation. Bitcoin closed yesterday at $88,229. Overnight into today, we've seen a significant drop to $87,310. That's down roughly 1% from yesterday's close. And the bigger story is the broader downtrend we're watching across the last 2 weeks. But look at where we're trading right now. We're hovering around $90,250. Price is holding above that 90,000 level zone, which was support. We've broken below it before, came back. That's the critical zone for bulls. The elite wave indicator on your chart is showing a bearish impulse. This isn't just noise. The wave structure is pointing downward with a strong bearish signal. The Elliott wave is suggesting we're in a continuation pattern, not a reversal. Watch this. The wave count shows we're potentially in the third or fifth wave of a bearish sequence, which means we could see extended downside before we stabilize. Now look at your sentiment score on the chart. It's showing slightly bearish at negative 12 out of 100. That means market psychology has shifted. There's more selling pressure than buying pressure right now. This score tells us traders are genuinely concerned about the next move down, not just taking quick profits. Let's talk metrics. Your chart is showing trend as bearish, which aligns with price action. Volume is down to 4.29%, which suggests conviction in selling is moderate but not extreme. The key levels your chart is flagging are support at $80,620, with resistance now at $107,462. This is critical. We're trapped between a broken support zone above and a major support zone below. That 80,000 level is going to be make or break for the next leg down. The AlphaFlow Pro indicator is showing bear active status. This is important. The action flag is set to wait, which means we're in a holding pattern before the next institutional move. Your confidence level sits at 35%. That's relatively low, which tells us the market structure isn't giving us clear direction. There's uncertainty in the trading community right now. Traders are holding cash and waiting for a clearer signal before committing capital in either direction. Here's what's wild. Your power line zone indicator is showing we're currently undervalued by 6.5% compared to fair value. That fair value line on your chart is sitting around $93,000. So even though price is falling, the power law framework is suggesting Bitcoin is getting cheaper relative to its long-term cycle position. The discount to fair value is building, which typically attracts dip buyers eventually. But we're not there yet. We're still in the falling phase. Now let's talk market sentiment more broadly. The Fear and Greed Index hit 15 out of 100 as of today. That's extreme fear territory. Extreme fear only shows up a few times a year. It's the kind of sentiment that typically appears right before reversals or violent liquidations. The last time we saw this level was during major drawdowns. So while price is falling, the psychology is getting more extreme, which historically creates opportunities for contrarian trades. Whale activity has been mixed. We're seeing some accumulation on dips, but nothing that screams institutions are buying aggressively. It's more like smart money is letting retail panic sell before they step in. Your chart's risk management settings show a suggested position size of cash, which means the indicator system is recommending you hold and not size into longs yet. That's prudent given the uncertainty. The macro trend on your chart is showing downstream. We're still in the bearish phase of the cycle. Your next watch flag says we're far from the bottom, which means consolidation could be coming, but breakdowns could extend further. That 200-day moving average is acting as a ceiling, not a floor. We need to break above it to confirm an actual trend reversal. Let me get specific with the price action. On your chart, I can see we're forming lower lows. Yesterday's low was around 86,000. Today, we're holding above that, barely. But the pattern is clear. The red candles are bigger than the green ones. Selling volume is outpacing buying volume. The moving average ribbons on your chart are compressed, which means volatility is coiling. When ribbons compress, we typically get a big move within the next few days. Could be up, could be down. Your MVRV scores are showing 1.06 normal, which means we're not at an extreme yet, but we're getting close. Let's talk volatility. Your chart shows volatility at 7.47%, moderate. That's actually lower than I'd expect given the price action. This suggests we could see a volatility expansion move coming. When volatility picks up along with price pressure, that's when we see liquidations happen and we see sharp moves in both directions. All right, price predictions. Here's my take based on what the chart is telling us. Next 3 days, I expect Bitcoin to test $85,000 to $86,000. That's a natural support zone where we could see a bounce or a capitulation low. If we break below 85,000, the next target is 80,000. Volatility over the next 72 hours should pick up. Don't be surprised by sharp $50 to $100 moves in either direction. Next 7 days, the realistic range is 80,000 to 92,000. We're likely to spend most of next week range-bound between these levels while the market decides whether to capitulate further or bounce hard. Your chart's power law is suggesting fair value around 93,000, so we could get a test of that level on a bounce. If institutions start accumulating during dips, we could rally back to 95 to 100,000, but if selling pressure intensifies, we could break 80,000 and test the 75,000 range. Next 30 days, bull case scenario. Bitcoin holds above 75,000, and we get a capitulation washout that clears all the weak hands. Then we rally hard into year-end back to 110,000 to 115,000. This would mark the end of the correction and the start of a new leg up into the December holidays. Extreme fear reading typically happens right before explosive rallies. Bear case scenario. We break 80,000 decisively and fall to 70,000. That would be a 20% drawdown from recent highs, which is within normal correction ranges. From there, it could consolidate for weeks before finding a true bottom. That would push a major bottom out into December or early January 2026. Most likely scenario over 30 days, we get one more shakedown to 80,000, maybe even 78 to 80,000. Institutions start loading at discounts. We rally back to 95 to 100,000 by end of December. The calendar year ends with mild bullish conviction. This sets up a potential strong start to January 2026. Here's my final verdict based on everything your chart is showing. Directional bias? Bearish to neutral short term, but turning bullish longer term. The next 5 to 10 days are critical. We need to see if 85,000 holds or breaks. If it holds with a reversal candle pattern, we get a quick bounce. If it breaks, we're testing 80,000 next. What you need to watch right now, that 85,000 support level is your line in the sand. Watch for it to hold and form a reversal pattern. Watch for volume to spike on any bounce. That tells us institutions are buying. Watch your fear and greed index. If it stays above 10 for more than 3 days, we could see a capitulation move. Watch the Alpha Flow Pro confidence level. If it climbs above 50%, that's a signal the structure is becoming clearer and institutions are positioning. Your elite wave, watch for a completed impulse pattern. That tells us the selling might be finishing. Most importantly, watch that power line fair value at 93,000. That's your target on any bounce. If we break above it on strong volume, the downtrend is over. If we bounce off of it and roll over, expect lower lows. My call? Hold cash for now. Wait for a clear reversal signal on the daily chart. The extreme fear we're seeing is actually a contrarian buy signal, but the timing has to be right. Patience wins here. The opportunity is coming, but it's not here yet. Thank you for tuning in to Daily Bitcoin Analysis. If you found this breakdown helpful, please smash that like button and subscribe for daily technical updates. Drop a comment below telling me what level you're watching closest right now. Are you waiting for a dip to 85,000 to buy? Or are you watching for a breakdown to 80,000? Let me know your trading thesis. I'll see you in tomorrow's analysis. This is Candace, and I'll catch you next time on Crypto Coin Insider. Risk disclaimer. Trading cryptocurrency is extremely risky. Do not risk capital you cannot afford to lose. This video is not financial advice. Do your own research, make your own decisions. Past performance does not guarantee future results.